There are so many markets to trade out there. In this video, I'll talk about why I trade the S&P futures and why I think futures market has advantages over other markets. Before I go into my reasons into trading the index futures, let's talk about what the futures market really is. The futures market has existed in the early days of commerce. It was created to allow producers like farmers and miners to hedge their products against price fluctuations. In the US, the futures markets got its start in Chicago in the mid-1800s. Over time, the markets expanded from commodities to currencies, interest rates, index futures, to even Bitcoin futures. The Chicago Mercantile Exchange, or the CME, is the biggest exchange in the world currently. Back before personal computer was popular, the futures market was traded in actual exchange buildings, where traders and brokers meet. Trades were done through shouting orders and writing them on slips of paper. It sounds crude, but it was a working system where there are checks and balances to allow for fairness and transparency. But now, almost all the futures trading are done electronically. Market hours are extended to almost 24 hours a day and 5 days a week. But why do I like trading the futures market? For one, the futures market is thoroughly transparent. Because trading is done on the centralized exchange like the CME, all participants see exactly the same price at any given moment. The hours of the exchange are set, meaning no trades can be done outside of those hours. This is something you will not see in over-the-counter markets like the OTC retail forex markets or the crypto markets. There is also no opportunity for dark pool trading to take place like you see in the stock markets. Dark pool is a term to describe transactions between certain brokers and institutional traders that is outside of public knowledge. Futures trading activity is fully transparent regardless if you're a small trader or a large hedge fund managing billions of dollars. Every single trade taken on the CME can be seen by every participant. The other advantage of the futures market is the leverage provided by the futures brokers. For example, if we look at the E-mini S&P futures contract, we see that it is valued at 50 times the exchange rate. At the time of making this video, the S&P 500 is at around 4,700, so the actual value of the contract is $235,000. This is the value you pay to trade one contract if you were trading without leverage. But nowadays, futures brokers offer day margin of only $500 per contract to trade the E-mini S&P, meaning you only need to put up a $500 collateral to initiate a trade of one contract. That is almost 500 to 1 leverage. This leverage is offered no matter if you're trading a small account or millions of dollars. But with leverage, it's important to realize that even though it allows for quick gains, it can also result in quick losses. Just like high leverage destroyed the real estate market back in 2008, it can destroy your account as well if you don't know how to manage it. One other advantage is the selection of products offered on the futures market. You can trade literally everything from commodities to index futures to even Bitcoin futures. And these contracts also have micro versions, which is a smaller collateral requirement for those trading small accounts. For me, my biggest advantage of trading the S&P 500 is that it is the most liquid and algo-driven market there is. And why is algo so beneficial? It's because algos give a lot of predictable structure to the market movements. Most days I can look at the market and quantify it, meaning I can profit from it pretty consistently. If you want to follow my futures trading performance and take advantage of a consistent trading strategy, check out the link in the description. Anyway, those are the reasons why I like trading the futures market. Please comment below and let me know if you agree or disagree with the reasons I gave. If you find the content useful, please like the video and subscribe to the channel for content on trading, investing, and personal finance. Later.